everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take. No one trade is guaranteed to profit. I think we all understand that. So you want to manage risk in a way that makes sense for you. And we've got some great tools built into our web trader and app that make the risk management side of things quite a bit easier, built right into our order window. And we'll go over some of those features if we set up a trade or two, depending what we find on the charts. But in one way or another, you want to manage risk in a way that makes sense to you. And keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, you can log into our web trader, which allows you to trade on the MT4 and MT5 accounts. And our app does the same, and through our app and the web trader, you can use all of the advanced features, including the features that we'll use today within the session. So if we log in here in the upper right, we'll be in the web trader. And, you know, given that it's a fundamental news webinar, it probably makes sense to talk a little bit about the earnings numbers that came in yesterday at the end of trading day. NVIDIA reported their earnings per share and their revenue. And you know, if you haven't been paying attention to NVIDIA, they've really been a big player in this whole AI technology boom. They supply a lot of what is needed for those types of systems in way of the electronic components. And so they've done quite well this past year and a half, with huge gains in stock value and earnings per share. And that has continued. The numbers that came out yesterday were already expected to be a big increase, and they went even far beyond that. So there's a lot of excitement surrounding NVIDIA still. Likely when NVIDIA opens today, you'll see a huge gap on the chart, an upward gap in the price. If we were paying attention to the predictions that we looked at in some of the prior webinars, remember, you can use the market buzz, and you can take a look at any instrument that you want, or just kind of shop for those that are trending the most. And NVIDIA has been trending as one of these larger size circles, meaning trending more than the smaller size circles week after week, month after month. And we've looked at NVIDIA, and we've looked at the predictions on NVIDIA, and I pointed this out, I think, on Tuesday. The expectation was that the price may rise over 24%. The prediction is still there, and we may see a huge chunk of that today when the market opens. And so we took a look at setting this up based on the technical analysis and based on the fundamental news that we just mentioned, that they had earnings coming soon, and that the expectation was that they would do well. And so we looked at these price lines thinking, you know, could the price get here? And now in the futures trading, I think it's already there within this zone between, you know, 1,000 and 1,099. I think it opens maybe at that level today or even higher. So this is just an example of the power of fundamental news. And now this will have carryover going into the day today, not just on NVIDIA, but a lot of the tech stocks. You may see some upward momentum that is somewhat contagious sometimes spill into other companies that are maybe in the same sector, in the same index, etc. So there's going to be some definite movement in response to NVIDIA. We'll see at which stocks rise, which ones may even pull back. You know, competitors of NVIDIA, maybe that's not so good for direct competitors, how well NVIDIA is doing. But in general, it's created optimism, say, on the US Tech 100, and it's been rising. And so when we look at that type of fundamental news, and we could search any instrument to see what's the most recent news and read the articles right from here, okay? And then you can understand when you look at the technical analysis for something like the US Tech 100, which is where we find NVIDIA. If you're not trading on the stock itself, you can trade on the index that it's found in. we can understand why on the 4-hour candles we see this huge climb. The last 4, 8, 12 hours, what happened here for the NASDAQ to climb in such a way that we have a huge surge up, and the timing is not a coincidence, because this movement relates strongly to what happened with NVIDIA. Now, if we want to take a look at the smaller candles and see, here we see the gap that came we see the spiking, and then we see the momentum come up, even a gap in the price, and further climbing, and now it's kind of gone sideways, kind of waiting maybe for the US market to open now. And so will this rise continue? Will there be a pullback? There could be a pullback here, because these numbers are for one company. That's what created this surge. And now the US Tech 100 has 100 companies in it, right? So not everything necessarily will maintain this type of rise, this type of excitement just because of NVIDIA, but you see the optimism. You see what happened here because of the strong numbers from one particular company. Okay, so when you see moves like this, a gap in the price even, meaning strong momentum in a certain direction, many times there's fundamental news behind it. Okay, almost always there's some sort of fundamental news behind it. And so I wanted to show this example of being able to understand when you see something in the technical analysis that the movements have fundamental news built right into them. Okay, now would this be an opportunistic spot if it pulled back? Maybe the top of this gap, that if this was to pull back, you could have a pending order to take advantage that it might bounce from that support level that it established after this gap up. That could be something to think about on something like the US Tech 100 if you're interested in trading on that. But the momentum might be there to keep carrying upward without pulling back. We'll see. If we want to look at the technical signal on the US 100, it's a buy. Okay, no, not a surprise, right? With what we talked about with NVIDIA. So it's a buy signal. We know there's a buy signal on NVIDIA stock itself. We looked at it in the market buzz area, and all of that's directly related to the fundamental news. Okay, and we were talking about that, like I said, Tuesday with NVIDIA, and even earlier on, and it looks like it could come to fruition potentially, that jump up over 1,000 in share value for NVIDIA. We'll see what happens when the market opens. Now, where else can we look for fundamental news other than the market buzz? We can go to the economic calendar. And on the economic calendar, we pick the date that we want. Now, today being the 23rd, we'll go there. And these announcements already occurred. We see that the actual numbers already came in. For those of you that are new to an economic calendar, you get the prior numbers from the last time the announcement came in. You get the forecast numbers of what's expected for the current announcement. And then when the time comes, the current or actual numbers come in. And we tend to try and compare not just to the prior announcement numbers, but to what was expected with the current numbers. And were the numbers greater than or worse than the expected numbers? Okay. And so if we scroll down here, we can see already some numbers like manufacturing numbers came in better than expected, out of Germany. And so, it's expected to go up from 42.5 to 44, and it came in at 45.4. So better than expected. All right. And you could even take a look and see, when these numbers do come in above forecast, what typically happens? Well, usually the movement maybe was already cooked in, it looks like, and that the majority of the time there's a pullback on the euro in the hours that follow this type of bullish announcement, where the numbers were better than expected, but then yet you see a pullback in the euro 60% of the time. Okay, and if they come in below forecast, a larger pullback. So with this particular announcement, it seems to move not in relation to how the numbers come in, but just to the fact that once the numbers come in, there tends to be a pullback on the euro against the USD, regardless of whether they come in above or below expectation. So that's different than some of the others we might look at where, and these are announcements that have not occurred yet, where maybe there's a direct relationship. If they come in one way, it moves one way, and if they come in the other, it moves the other way. So initial jobless claims, this has been a focus in the US. Will the economy slow down? Specifically, will the job market start to have any issues? And so the focus is, when can the US start to lower interest rates? And unless the job market and other numbers start to show that they're really declining and getting worse, then the US is going to have a hard time saying that they should lower interest rates when inflation is still higher than what they want. Interest rates were raised to try and bring inflation down, to cause economic pain, even to force inflation down. And so if these numbers come in better than expected, then that creates fear that, wow, they just can't lower the interest rates yet because the news is too good. They're afraid if they lower interest rates when things are too strong, that inflation will just come right back and get worse than what it already is. Okay, so with that as a backdrop, then jobless claims, if they come in higher than expected, is deemed bad news, which then could actually cause less fear and more anticipation of interest rate decreases. So usually, if jobless claims are higher than expected, that's bad news. But if that type of bad news comes, it actually could create optimism on the markets about interest rates then maybe being able to be lowered sometime this year. Okay, so it's kind of the bizarro world we're in right now. Investors are hoping for poor economic data in order to cheer the fact that then interest rates could come down. Okay, and so if we click on this tool for the economic calendar, we can see, has this been the case in the past? What has happened if these numbers come in higher than expected or lower than expected? And so we can take whatever currency pair we want. We can put whatever length of time we want out of this list after those announcements to analyze. And if we look at all the events, they're all mixed together: better than expected, worse than expected, as expected. But then we can qualify it. If they do come in above forecast, meaning more jobless claims than expected, meaning bad economic news, what happens with the Euro USD? And what we see is 75% of the time, the Euro climbs against the USD, meaning the US weakens if this news comes in as bad news. Now, why would that happen? Exactly what we just talked about, right? So if the jobless claims are higher than expected, then that increases the expectation that things are slowing down in the US, and so then interest rates maybe could be cut sometime this year. And so it makes sense that, if higher than expected jobless claims lead people to believe that interest rates could be lowered, then that would make sense that the USD would weaken with that kind of news. Okay, with that kind of expectation, because lower interest rates on a currency tends to weaken the strength of a currency. So when these numbers come in bad news, rather than creating fear and people rushing in to buy the US dollar as a safe haven currency, the opposite's happening. When bad news comes in out of the US, the markets kind of cheer that, the USD weakens, and the markets tend to rise, as well as other currencies rising against the USD. Okay? That's what's been happening 75% of the time with this announcement. Worse than expected jobless claims numbers, meaning higher than expected, the euro climbs against the USD. If the opposite happens, if these numbers come in better than expected out of the US, meaning less jobless claims filed, it's 50-50. Okay? It's not enough to create a huge fear response and the USD having a strengthening effect 100% of the time or something, but we see that the euro just doesn't have any chance to gain against the USD, meaning the USD stays stronger if these jobless claims numbers come in better than expected. Okay, and even though this is 50-50, right? Where is most of the movement? Down. Just one of these downward movements is a further pip movement than all three of the ones that went up. You could add all three of these green bars together, and it doesn't equal this one by itself or this one by itself. Okay, so there's a lot more red dropping than there is green rising. So even though directionality was 50-50, the preponderance of the movement was USD strengthened and pulled the euro down for most of the pips movement when these jobless claims numbers came in better than expected, meaning less expectation of a rate decrease, meaning stronger USD when these numbers were better than expected. In this case, below forecast is better than expected. So we see the flip reverse effect when the numbers are reversed. So when these numbers come in better than expected, USD strengthened a lot more pips wise than the euro. When these came in above forecast, the euro strengthened a lot more pips wise than the USD. Okay, so all you have to do then, if you see the numbers come in, look within the first 5 minutes, how far has it moved and in what direction? We see the average range movement only 11 pips in the first 5 minutes. When it's above forecast, when it's below forecast, only 9 pips movement within the first 5 minutes. But after 4 hours, it goes from 9 pips range movement to almost 45 pips range movement. So it's not like you don't have time after you see the numbers to place the trade before the greater movement that has happened in the past would have occurred. You have some time to have hindsight, to see the numbers come in, and then decide if you like the entry point in those first few minutes to try and go after what you expect to happen after maybe 4 hours. Okay, so this is a very powerful tool that helps you analyze data that would otherwise take hours and hours to analyze if you're trying to find all of these movements in relation to these announcements on the charts from the past. Okay, Amit, I hope I've answered your question. You're asking how would you use this information on the jobless numbers to enter the market. And so I think I've explained that I have an expectation of what direction it would move the majority of the time. I have an expectation of the range movement that I would expect to move depending on how the numbers come in, above or below forecast. I have an idea of directionality and distance, and I can use simple data-driven trading then. Watch the numbers come in. If in the past there was an advantage to trade in a certain direction, then I can see if that will carry out in the future as well. And trying this once and it fails, or once and it works, doesn't mean, hey, this is a great strategy, or hey, this strategy is horrible. You want to try this on multiple announcements that you think show strong data from the past to convince you on what direction to trade, depending on how the data comes in, and test those over the course of weeks and months where you try each of these announcements. They're repetitive. They come in week after week. The same announcements are coming again and again. And see after you try each one 10 times, which announcements worked best for you? Which ones were profitable overall? Which ones did you have a higher winning percentage than the others, etc.? Okay, very simple strategy to test out and very powerful information to use. Amit, you were asking about NVIDIA. When the market opens, you're saying, should you enter the market with NVIDIA? And my answer is I can't advise you whether you should buy or sell NVIDIA. But I would say that you will see a large movement likely on NVIDIA, probably a gap up, okay? And that helps you, now that you know the fundamentals of what happened, it helps you understand why that happened, right? Now what you could do is then have a technical strategy to trade in the direction that you think makes sense. And if because of the news you want to buy NVIDIA, now it's all about entry point, okay? Maybe it starts to move down and fill the gap from where it closed yesterday to where it opened today. If there's a big gap up, many times you can trade the gap, meaning if it re-enters the gap, many times it'll try to fill the gap back down to where it closed the day before then bouncing back up potentially, right? So there are all kinds of different technical strategies you can use once the news has already occurred, right? So knowing that those figures were coming out, that announcement of earnings numbers, earnings per share, and revenue, you could have acted on that Tuesday when we talked about it, set up a pending order, set up a market move, and been ready for the potential large move on NVIDIA ahead of time as well, okay? So both ways, you can trade before, based on the upcoming news. You can also trade after, based on what you know about the news already, because the news already occurred, and then it's about a technical strategy of where to get in, okay? Very good questions. So what else can we do on the economic calendar? And actually, let's open that back up. If we want to look at other announcements, okay, we look so far at the jobless claims announcements out of the U.S. There's other data that comes in. There's new home sales we could look at out of the U.S. Let's maybe switch countries and look at other announcements that are tomorrow that haven't occurred yet. There's data coming out of Japan. There's retail sales out of Great Britain. There's GDP growth rate out of Germany, etc. Okay, so we could start to look and say, maybe you don't usually trade on the Canadian dollar, for example. If I pull up the retail sales out of Canada, they're rated as a high-level announcement. I can take a look and see what has happened in the past surrounding something like retail sales out of Canada. And you might find gems in here of data that you never would have traded on a certain instrument, but then you realize when you check this information how strong this data could be. So, if I'm looking, say, 4 hours after the retail sales numbers from the past, it just looks like half the time it goes up and half the time it goes down when I put all of the events, okay? But if I want to qualify this and say, well, when these retail sales come in above forecast, now all of a sudden that looks pretty powerful. 71% of the time, the Canadian dollar strengthens and pulls the USD down. And not just by a little bit, we're talking an average range movement of over 53 pips. So, if you can be right 71% of the time, if you can even be right 55% of the time, you can profit pretty substantially. So, only once did this really move up. The other one time, it just wiggled up in the 4 hours after. The vast majority of movement has been down. You can see that in the imaging when these numbers come in above forecast. Okay, it makes sense. Better than expected retail sales in Canada. The Canadian dollar, 71% of the time, strengthens and pulls the USD down. What if it's the opposite, above forecast? Or I'm sorry, below forecast. Look at that, the opposite results. And this is the type of data that gives me more confidence that when it comes in one way, the movement goes one direction. When the data comes in the other way, the movement goes the opposite direction, which would make sense in your mind, at least in mine. So this looks like a really strong announcement data-wise. 75% of the time up if the data comes in below forecast, and really almost 100% of the time it did not go down. And what I mean is the one time out of 4 that it went down, look how much it went down. Almost nothing after 4 hours, okay? And this is nearly 40 pips of rise on average then, or a range movement in the 4 hours after the event, okay? So very powerful stuff. Below forecast, 75% of the time up, and really almost 100% of the movement up after 4 hours. If it comes in above forecast, 71% down, and probably closer to 80% of the movement downward. Okay, so I would suggest on, say, Saturday, Sunday, you go through each of these major announcements, even some of the medium level. I've filtered over here that I'm not showing the low level announcements. I'm only showing medium and high. And typically I focus on the high level, but some of the medium level ones result in quite dramatic movements on the charts as well. So you can go through these announcements even on the weekend, identify the ones that statistically are very strong, maybe like this retail sales month over month out of Canada. Find the ones that you have the most confidence in data-wise, and then be ready to do those trades through the week. Okay? Obviously, they have to fit your schedule, can't be in the middle of work and necessarily in trying to watch the announcement come in and place a trade. Maybe you can. But you obviously have to think about your schedule and which announcement times you can act on as well. Okay, but really, this data is something, like I said, that would take you hours and even days to compile, and within a couple clicks, you can have the statistics right there for you to know how to act on these. Okay. Any questions on the calendar at all before we move on? Yes, I mean, the volatility tool, that was this, okay? So hopefully you understood the explanation that we went over now as we went over the Canadian announcement example, okay? And like I said, there are other announcements tomorrow. Durable goods, we could look at the effect those have out of the US. We can look at GDP growth rate out of Germany. I know it's a medium level, but GDP numbers usually are deemed pretty important. So you can see which of these announcements give you the best statistical past to help you try and predict the future. Okay. All right. So where else can we look for fundamental news? A simple place here is the news feed. Okay. And this really what it does is it takes the recent economic calendar data and the recent news, like from the market buzz, and compiles it into a news feed and summarizes everything that you might want to know about particular topics. Okay, so here's a pre-European market news brief that came out in the news feed. Fed's officials mentioned willingness to tighten policy further. Okay, and then they go on to talk about that and what you might want to trade on that could be related to that news. Okay, and it looks like the focus is gold here. All right, so you know when there's policy tightening, that's probably to try and control inflation. And when you start talking about inflationary data, many times gold can be a focus. Okay, gold is a inflationary safe haven. When there's fears of inflation, many times people may run to gold. Okay, so this is a really nice tool for those that don't have a lot of time to wait on announcements, to time an announcement trading strategy like we just went through. Maybe you can only do it a couple times with the announcements, but the rest of the time you're going to need to look for a summary of the news. You can find that here, and the news is focused on particular instruments as well. Okay, so here's a pre-Asia market brief. Okay, there's been some fear in Asia coming into today. Okay, while the U.S. Indices have bumped up a little, there's still some fear in the Asian markets, and so you can read through and get a summary of that. Okay, so very easy to find fundamental news. Now, let's say you were looking to make a move on NASDAQ because of the NVIDIA news. And so let's walk through a trade example of how you might set something up. Now, I know the US market didn't open yet, right? We haven't even seen what price will NVIDIA open at. Luckily, with a large gap up is my prediction. We'll see. But what I do know is that the futures trading has the NVIDIA price up dramatically, and our indices trade on the futures prices. And so they've been running all night and into today, and they've also gone up. Okay, so I see a couple potential strategies that could be employed with the US Tech 100. One would be waiting for a pullback to a price level that you deem opportunistic if you're looking to buy, but you don't want to buy from the price that it's at now. Okay, so the first support level I see is here. This is the support that formed after the big rise, after the NVIDIA news. And then we see the support level form here with 1, 2, 3, 4 attempts to break below this price, and then it moves up to where it is now. Now, as we lead up to the open of the US market, if this comes down and breaks below this support, you could see a further fall towards this support down here, which is the top of this gap, okay, coming into today. And so this is the first support level. This is the second support level. Let's say you're bullish on the US Tech 100, but you don't want to get in at the current price. You would like a better price down lower. So you could have a pending order to buy from this price with a stop loss just below, or if you are still wanting to be more patient, you could have a pending order down at this price, this support level. Now, if this just takes off and starts running, then you miss the move, right? But that's the price you pay for being more selective sometimes with entry prices. Now, on the flip side, a couple other things you could do would be, let's see if we can get a view, because this is an all-time high, we may not get a view with anything above on the chart. So I'll just pull the chart down. Let's go maybe to 1-day candles. And so as I look at this, if this breaks the high that it reached, and maybe we see it better in the 1 hour, 2 hour. Okay, so here's our resistance on the upside. And so you could do two things if you were bullish on the Tech 100. One would be have a pending order, like we suggested, down at one of these support levels. This support level here, and or this support level here to buy from a better price. That doesn't keep you from also putting a pending order in case it just breaks out past this resistance, a pending order above today's high, which is above the all-time high. Okay, certainly if this goes up and breaks the resistance that we see on the smaller candles, okay, we're talking about this resistance here. That was after the NVIDIA excitement. We see the pullback, we see the support form. If this goes up and breaks this resistance, you could have an entry up around 18,980 as a buy pending order that if it confirms a breakout and a further uptrend, you could buy with the breakthrough, okay? So you could do a multifaceted strategy with trading if it pulls back from the support and also trading if it breaks through, showing upward momentum, trading in the upward direction as well, okay? So if we wanted to show the risk management on this, we would put take profit. Let's say you're looking at this breaking 19,000 and going towards 19,100, let's say. Your stop loss, if it breaks this resistance, could be back below this resistance. So somewhere down around 18,950. And so then we'd be looking at a potential profit many times greater than the risk, okay? And so this is where we can start to get into understanding what the power of technical analysis can do for you, because you can get your stop loss at a spot that is strategic, below what would have been, if it breaks through this price, it's an uptrend breaking the resistance. So then you put your stop loss back below that broken price at somewhere down a little lower. And your take profit then, if you're expecting a breakthrough and your entry is up here, you then could expect some type of surge up if it breaks this resistance, and you could be looking up at 19,050, 19,100. And so you can play with this setup and say, okay, I don't want to be too greedy. I see I would make many times my risk at 19,100. Maybe you'd even be happy at 19,050. And so you can let this calculate for you, how much would I make, how much would I risk with this setup. And so maybe I want to go after this 5,000 profit, but I'm willing to risk a bit more than this. And maybe I think my stop loss is too close to put it just below where it broke through the resistance. So now I can play with this number. And I can say, what if I put my stop loss at 18,800? Okay, no, now I'm risking almost double what I would make. So then I say, okay, 18,850. Okay, almost even, right? And so I can start to set this up in a way that makes sense for me for my risk reward. Okay, and then I can put the trade in motion. And so it just depends how I would want to do this. Now, this is a market move setup. If I was trading now, if I'm doing execute when price hits, now I can do it from my expected entry with the pending order, which, if I'm waiting until it would break the resistance and I'm entering at 18,983, okay, execute when price hits, this price up here, take profit, 19,100, stop loss back below where it broke through, so 18,000, maybe 950. Or 925 even. Okay. So now this would be the setup for that pending order. And again, it risk manages for me. I know where my entry is. Okay. I know where my take profit would be up this direction. I know where my stop loss would be. And all of that directionality is based on fundamental news, but the exact price levels that I'm entering are based on the technical analysis of exactly where I think it's opportunistic to enter and exit with my entry and with my stop loss and with my take profit. Okay, so these tools make it very simple to risk manage. So once I have my entry price and my exit prices picked, now I might say, all right, I need a different trade size. I like the ratio here of possible profit to possible loss, and I like the price points, but now I need maybe a smaller trade size. So I'm risking the amount that I want. So now I've got 1160 risk. If I do 0.1, I've got 580 risk and potential profit 1170. So I can set this up exactly how I want for my risk management. Now I'm risking a little more than 1% of my balance. Okay, and maybe that's where I'm comfortable. 11.11, almost exactly 1% of my balance, 638, a little less than 1% of 65,000. And so now I get the exact number and I can go ahead and put this order. It's a pending order because it's execute when price hits. I could put this order in motion. All right. So very simple. Once you have the fundamental news and you know the direction you might want to trade, very simple then to start to work out your technical analysis of where you would prefer to enter and have the risk management done for you as well. Now, I'm not here to say you should buy on NVIDIA. You can sell if you want. Maybe you think it's going to pull back after it gaps up all the way back down to where it was. It could. Okay, so in the end, it's your decision what direction to trade and what instrument to trade on. But these tools help you decide that. And these tools help you figure what's the amount of risk you'll have and what's the potential profit you'll have as you set it up in the order window. So it makes the risk management very simple. I think this is a good place to stop. I would suggest pay attention if you have the time to those announcements that come in today and tomorrow. It looks like from the past data that there's been quite a bit of predictability based on the data analysis from the economic calendar to be able, once you see those numbers come in, to see what direction has it moved the majority of the time in the past when the numbers have come in that way. Pick those announcements that you have the most confidence in from the process that I showed you. And then also maybe pay attention to the tech sector, maybe NVIDIA in particular or not. The tech sector in general is responding to the NVIDIA numbers that came in. And, those US announcements today really could move the US pairings as well. So that's something to take a look at. Thank you all for joining and for the good questions. And till next time, good luck with your trading.